Hi, welcome to Trish Time. Today we have Linda Ray, owner of Ray Insurance. And from what we gather, Linda's father, Francisco Ray, started the business in the late 70s in Sleepy Hollow so that he could be around his family more. And unbeknownst to Linda, she actually started working in the insurance industry in the mid 80s. So, welcome, Linda. Welcome to the show.
Thank you for having me.
So, like I said, it was unbeknownst to you that you started working in the 80s. So, how did that happen?
Well, with my dad after school, the office was right across the street from the high school. So we would go in there to help him after school. And I had no aspirations of being in the insurance business at all. I left the town, I left the state and moved to Atlanta to pursue a career, but that also ended up in insurance. And then when I came home, I tried to, once again, not do insurance, and I ended up back in the family business. So, the unbeknownst part was I did not know 30 years later that I could say that I have had a very nice, successful insurance career. So here we are 30 years later.
Okay, so we're talking about insurance. Now, there's certain insurances that are required by the state, certain insurance that people should have. So would you like to start with that?
Sure.
Okay.
So with insurance, if you own a car, the Department of Motor Vehicle will require you to carry liability insurance. So the state mandates with certain lower limits, which we could talk about later. If you have a lien on the car because you did not pay cash, then you're going to be required to carry physical damage in case there's a collision or a deer or vandalism or fire. So you will have to carry the physical damage. Another example is if you're getting divorced and the decree calls for the spouses to carry life insurance on each other for the welfare of the children. So those are a couple of examples. Some of the business clients will have contracts with their clients that will call for an entire section of insurance to meet certain requirements for that. So
there's also different life events, life-changing events that happen that, a lot of people don't think about it, but those might be times where they would need insurance.
Well, I would have to say, and of course I'm biased with being in the insurance field, that every life event could very well possibly call for an insurance policy to be put in place. And one of the things that I like to talk to my clients about so that maybe insurance doesn't have so much of a stigma is insurance is really to protect financial security and to minimize your out-of-pocket expense. It can be considered as having a lawyer on retainer with a checkbook to come to your defense in the event there's an accident or an incident and you're sued, which happens all the time. And that's really what it's there for.
So, for example, there would be an example of like if you got married, obviously maybe you want to take out life insurance. If you had a baby, is there type of insurance?
Well, life insurance, so when you get married, if you buy a house, there's certain obligations, certain financial obligations that if the two spouses are depending on one another because it's a dual income household and your lifestyle and your wealth accumulation becomes such that you rely on each other, if anything happens to the other spouse, you want to make sure that you're protected to pay the mortgage and also to raise your child if you have a baby. If one of the spouses passes away, you still need to take care of the baby and the child and with school and all the future events for the child, whether it's tuition, a wedding, buying a house, and you want to protect the income that is what the household is enjoying that allows for the lifestyle.
And what about the other types of insurance that people may not need but they want that kind of insurance?
Sure, that's those. I love when people are calling because they want the insurance and not because they need the insurance. So a couple of examples may be where a business owner is wanting professional liability, and some of us know that as errors and omissions, E&O, or malpractice. It's protecting your career. It's protecting your business in the event there's an inadvertent mistake or negligence somewhere along the line as the services are being rendered, and the client alleges a financial hardship because of something we did wrong or something we forgot or something we didn't do, that's professional liability. And that isn't always required. Sometimes a contract will require it, but sometimes they'll get it, there's lawyers that have it, accountants, CPAs we work with, a lot of consultants get the professional liability, and then you have a whole host of other various. You have interior designers, realtors, pet groomers, hairstylists. So I do enjoy working very much with the professional liability, only because they understand the value of the insurance.
There's also something else where you have a business and you go into business with somebody. It's one thing when you're on your own,
yes.
Okay? Mm-hmm. But if you get into a partnership or you have several partners, there's insurance for that as well.
Yes, those agreements with partnerships are called buy-sell agreements. Those are legal documents, but within the legal documents are the provisions such as how will one or both decide to terminate the partnership. What happens if one of the partners passes away? What happens if one of the partners is disabled and can't work? And then what happens if one of the partners wants to retire? How do you go through exiting the contract of the partnership? Well, there are the death and disability provisions can be funded with insurance. So that's what's called funding the buy-sell agreement. So you would want to each partner would get a disability policy on each other and a life insurance policy on one another. That way they don't have to go to the bank and get a loan, or they don't have to take from savings, because whatever happens to one of the partners, the surviving loved ones are now the new partner. That's a whole nother show. But there are insurance policies that will help fund those buy-sell agreements, and those are also the business owner being proactive in protecting his business and the value of the business.
Yeah, that's something that I found really interesting in having spoken to you, prior to the show, obviously. I never really thought about that. My brother and I did have a business a long time ago, and he was my brother, so we didn't really think about it. But let's say he wasn't, and he was just a partner, and then all of a sudden now we're going to dissolve the business, or we had a disagreement or something. These are the types of protections that need to be in place that people really don't necessarily know about, which is why, like I said, we brought it up here on the show so that people understand, like, there are certain things that you might not know about that can be covered by insurance and actually protect you. With regard, though, there's a lot of climate change. There's a lot of different things that are happening nowadays. What are the different, what types of insurance have you seen, like an increase in with regard to property and that type of stuff?
Well, there's some of the changes with the climate change has been how the insurance companies are increasing their deductibles on hurricane. So this area, since Irene and Sandy, has seen where the insurance companies are trying to protect themselves in the event of a hurricane. So you'll see a 2% deductible specific to hurricane. Windstorm is typically covered. So that's why, and with the extent of some of the damage that we've seen in this area, they're going to have increased deductibles. Some carriers have 2%, some do not. So you really want to make sure you're understanding what your out-of-pocket is going to be in the event of damage. Our office building in 2006 was hit by a tornado in 2006. And in 2006, I don't know, before I had been back into the area since 1999. I had never heard of a tornado, Route 9 in Sleepy Hollow. What? That's crazy. But we were hit, and luckily there was no injuries. There was some damage, but it was not catastrophic. So windstorm, flood, everything's changed. They're remapping. Everything is a flood zone. You can say you're not in a flood zone, you're in a flood zone, because they're considering every property can potentially be flooded in some way. It doesn't have to be
from a storm necessarily, but
just an accumulation of rainwater, you know, and that's a flood. And guess what's not covered under your homeowner's policy? Flood. Specifically excluded. Never going to be covered. You have to get a separate policy.
Yeah, like I said, with regard to the way the weather's changing and certain things that are happening now that didn't happen in the past, you know, you have to rethink how you actually insure your property, your valuables. That's something else. If somebody has a lot of jewelry, perhaps, and the jewelry is in the home, they might want to rethink, you know, how much money they put into their policy.
Well, with valuables and personal articles, you have to have them itemized if they're not in a safe deposit box, which is, you know, the likelihood of anything happening if it's in a safe deposit box is one thing, but when you start walking around with it, your homeowner's insurance has a sublimit of only $1,500 or $2,500, but it's not going to cover your engagement ring if you have a $12,000 or $25,000 ring and you lose it. So yes, you want to make sure you itemize your personal articles. You have to get appraisals or have receipts, and there's different ways to even have that insured. So really the bottom line, I have to say, and what we see most often is people are not looking at their insurance policies on a regular basis. And the insurance companies are always changing how they structure their policies because they want to be able to write business for consumers. And they'll try to do the best job they can to make it as affordable and economical as they can. So they'll restructure how they tier depending on credit scores, depending on driving records, depending on where your property is located, how many claims have there been, if any. And so you don't want to just have your policy sit for 5 or 10 years and never look at it again. We've completely revamped policies within the same carrier. They'll have a carrier and we'll say, this is an old policy. You could get a better rate, you know? So, and then don't even get me started on the liability limits because it does not cost any extra to have a liability limit that is the maximum the carrier provides, period. If it's $500,000, take it. If it's $1 million, take it. I see $300,000. Is your house worth more than $300,000? If it is, then your liability has to at least match that. Some people have had $100,000 liability. You can't even have somebody in a hospital for a day and have that kind of limit be adequate.
Yeah.
So lower limits have to be increased. That's how we do it anyway in our agency. Umbrella liability that protects, extends liability above the auto and the homeowners. So you want to increase that. I mean, you have to look at your net worth. You have to look at what your property is worth. You have to look at your income and your earning capacity, because all of those things are exposed without the insurance if somebody sues you. And people sue. They'll sue anyone for any reason at any time for millions. So that's why you really want to protect yourself.
Yeah, I remember there was this incident where my mom actually fell in my home, and
she's okay.
Yeah, she's okay. But I wouldn't be smiling. But she fell in my home, and she hurt her knee, and she went back to Florida. And one of her friends said to her, "Why don't you just sue your daughter?" So that she could pay, you know, because she had to have some medical attention to her knee. But my mother was like incredulous. She was just, "Are you crazy? Like, I'm not going to sue my daughter." Like,
well, you know, she doesn't even have. She can actually have a medical bill paid for through your policy, and it's not a lawsuit. It's not even a penalty to you. It's called medical payments, Medpay. You'll see a limit that may be $5,000 or $10,000, and even that kind of limit, if you can get 10, it might cost you a couple dollars to increase to 10. But that coverage is there for, oh, your mom needs an MRI or your mom needs to go to the emergency room. She can submit the bill and your policy would pay for it, and it's not anything against your policy as far as That's what it's there for, those low limits, just to take care of someone's injuries.
But it was just funny that
Yeah.
she was just like, imagine my friend said that, I should sue you to pay. Oh, she wasn't going to do it.
Right.
There was no way she was going to do it. And she did have, she has her own insurance, and, she used her insurance to
The health insurance, yeah.
So that was fine, but it was just precisely, as you said, people will sue you for whatever happens.
Any reason at any time.
I have a hill, not really a hill, but it's an incline on my property. And when it snows heavily, my neighbor's kids used to slide.
Yeah.
And I said to them, listen, this is a gentleman's agreement. If if anything happens to I let you on the property.
Yeah.
But if anything happens to your kids, that's on you. And
Yeah.
do we agree on this? Because if we can't, then
can't
your kids are not allowed.
No more playtime for you.
Yeah. But I mean, it was a concern,
right?
Because you don't know.
As it should be.
You don't know if something would happen.
That's the sad part, though. Really, your kids are just having fun.
Yes.
And then
something happens, and then that's it. But like I said, when we were friends, we're still friends, and I just said to them, I have no problem with your kids playing on the property, but let's just agree right now.
Yeah.
Anything happens to them from sledding on that little incline,
yeah,
that's on you. And like I said, we're friends, and nothing's happened, and the kids don't really play anymore because they're older now, and they're with their friends.
Much snow.
Yeah, that's another thing too. There hasn't been,
which is good for you.
Yeah, exactly. But there's also some other issues. Westchester, we have a lot of trees, right?
Oh yes, the tree.
Yes, the trees. So if a tree falls, no. But let's talk about that. So. Sometimes your neighbor will have a tree that's diseased or dead, actually already, and it falls.
Well, there's protocol with if the tree is noticeably potentially diseased and you notice it, but it
has no leaves in the summer. I think that's a sign.
That's a big sign. So if you were to notify your neighbor, he really should take the effort, and it really needs to be in writing, as simple as a note mailed,
registered mail
or something in writing that you're concerned about this diseased tree, and then he is supposed to make the effort of either having it tested by an arborist or just cutting it down. And if it goes along those lines, then if anything does happen to your house, they have to pay for it. But the way the tree falling situation goes is, number one, if a tree falls on your property, whether it's your tree or your neighbor's tree, but it does not hit your house. Let me repeat that. It does not hit your house. The good news is it did not hit your house. The bad news is the insurance does not cover for removal. You will have to pay for that, but hopefully it's a tree that you can season it for firewood. Who knows, right? So if your tree is in your yard and falls on your neighbor's house because of a storm and a covered peril, windstorm, and it hits your neighbor's house, his homeowner's insurance pays for his damage to his house, even though it's your tree on your yard. Because act of God is not a covered peril, and it's not a reason why that would be a covered peril. The damage to the house because of the tree that's fallen is a covered peril, but the act of God, and you had no control over that, even though it's your tree on your yard, on your property, his homeowner's insurance will cover it, and vice versa. But the whole disease tree, it has to go through a protocol of sorts that it was known to be diseased and he did nothing about it, then he will be responsible.
Yeah, and as you said earlier, there needs to be something written that's provided to the neighbor
that you have brought to his attention that this is a concern and that you don't want anything happening to your house or his house for that matter. He should want to get rid of it too.
Yes, they should, but people don't always do the right thing.
Well, that's true. I have a blog on our website that has the various scenarios of which tree on whose yard hits which house. So if you wanted to check that out, it's there.
Yeah,
because we get that question a lot.
Yeah, I mean, like I said, in my case, and I mean, sure, you know, in Westchester in general, there are many trees. Some of them are in the back of people's property and they don't really care, but they're actually closer to the homes of their neighbors. So the neighbors care.
That's right.
about that. I mean, I've had branches fall into my yard from the neighbors that have damaged some of my trees, but there's nothing really I can do because, as you said, it's an act of God, and that's just the way it is. I just have to take care of my own, and so be it.
Yes.
Are there other scenarios that you think people should be aware of, that there is insurance that would help them out?
Data breach and cyber liability insurance. So if you're a business and you're collecting any kind of personally identifiable information, you are legally responsible to notify in the event of a hack or a breach. So a lot of insurance companies are making it very easy and affordable for you to package that kind of insurance within an already existing general liability or package, business owner's package policy. The data breach and cyber liability, everybody's talking about it. The breaches are getting bigger. I mean, you talk about organized crime. This is like there are professional companies that are trying to hack emails and computers, and typically your general liability policy isn't going to protect you for computer fraud or funds transfer fraud, or provide the remedy of notification in the event of a network breach. So if you're a business owner and you're already used to having to deal with insurance on some level, you may want to, for a few $100 a year, find out how you can protect yourself in the event you do have to notify customers that their information might have been captured in some illegal way.
But this we're talking about because I own a business, but I don't really collect that much personal information from my clients. I don't really keep that information.
Well, how do they pay? They pay you.
They pay me, but that's through another online organization.
Okay.
So it has, like, I don't keep their information. It's through another provider. There's a third-party provider that actually I use. So like I said, I don't have their information, thankfully.
Well, there's, you'd be surprised what they are classifying as personally identifiable information. Yet another blog on our website about what information, whether it's the name, an address, an email, the social security numbers, but you're not taking a credit card information, dates of birth. There's quite the list. And again, it's the mandate or the legal ramification that these business owners are having to endure is the actual expense of notifying the customers that they have on file that had potentially been breached. So,
well, there was this big breach with Empire Blue Cross Blue Shield, right?
Oh, there's them and other companies that I will not mention because who knows what'll happen. I don't want to get sued.
But are there any, as we're coming to the end of the show, are there any other tips or guides, like how often should you review your policies?
Every renewal you should be looking at your insurance and your renewal.
So that's every year.
Some policies are 6 months, so that would have it. You'd be more active if you were looking at it every renewal. But if it's an annual review, absolutely an annual renewal for an annual review. And we're very, very adamant about the liability limits. The state mandated limits for car insurance are only $25,000 per person, $50,000 per accident, and $10,000 for property damage. I mean, that's nothing. We don't write those policies, and if someone insists, they're signing off on it because it's not enough. The homeowners insurance, we are really looking at increasing deductibles. The standard was about $1,000. We encourage to go to 2,500, and that's again is to prevent you from having smaller claims because they don't like seeing smaller claims, because then it's just costing more than the actual check that they write. Insurance is for catastrophes.
So thank you very much, Linda, for being on the show.
Thank you.
And you're providing us with a lot of information, especially for the cybersecurity and also the tree falling, which again is common. It's a common occurrence that happens here in Westchester simply because of where we live. So everybody, thank you very much for joining us once again. Hopefully you've learned something about your coverage and what you should be looking at and what you should be reviewing. And as we said on the show, every time your renewal comes up, make sure you look at it and protect yourself and your loved ones. So thank you again, everyone, for watching, and we'll see you again next time. Bye-bye.
Thank you.